Welcome to this update on global hotel performance by STR Global. My name is Konstanze Auernheimer. I'm the Director of Marketing and Analysis for STR Global based in London. And I would like to talk to you about the kind of recent results we have seen globally. The good news is demand is back across the world. We track demand in terms of the occupied rooms, and we have seen a huge increase in the occupied rooms over the first 9 months of this year compared to the previous time frame last year. The one-star region in all of this is Asia Pacific. Asia Pacific came out of or bounced back in RevPAR terms in November 2009, and since then has pretty much seen double-digit growth around the 20% mark for pretty much all the months since then until now. And with the economy, certainly some very strong economies there, with China, India, a lot of business demand coming back. It's one of the powerhouses in the moment driving the RevPAR recovery on a global basis. Interesting as well for Europe, actually, that Europe has turned in euro terms positive in December 2009, which was quite good to see that actually that region recovers quite quickly. And besides the fact that there are a lot of differences on a kind of regional, sub-regional basis within Europe, overall the region has performed really well, which we might not have expected so early, but it actually turned out compared to the last downturn in 2003 and 2004, that actually average room rates have improved way quicker than the last time around. That dropped off as well more in the downturn, but it's still good to see that actually with the demand picking up, average room rates are starting to move again upwards. The Middle East, besides being a star region for a long time and having double-digit growth in terms of average rates and as well in performance, actually is the one which kind of still lags a little bit behind in RevPAR recovery terms than a lot of the other regions. One factor with this is the Middle East went way later into this downturn, and I guess maybe initially we all thought that they would potentially be a little bit immune to this, but they were affected as well as everybody else. But since they went later into it, it took them longer now to get out of it. There is a lot of supply, which is kind of the main reason of why that region currently suffers a little bit more than the others, which has entered the market and continues to enter these markets. And whilst the short-term prospects might be a little bit bleaker than the other regions, it's certainly, we are quite confident that that region will be able to absorb that new supply, and certainly for the long run will come back and prosper. We were always interesting to see what happens now in this fourth quarter 2010, as the percentage changes now are comparable versus the improvement of the fourth quarter in 2009, and 2009 certainly was already improving slightly on the very bad fourth quarter 2008. So we're always quite keen to already see what happens now in September, certainly with the October results coming out. And what is quite positive that actually that stable recovery, which has been so far this year, seems to continue now for September and October results. And the current climate, whilst there are a lot of risks still out there, there are a lot of uncertainties, economic-wise. However, in the moment, we feel that that recovery should continue for 2011, and that we should kind of then potentially, if no major event happens, we should see more prolonged growth in later in 2011, 2012.